stage, many are questioning the sustainability of the runs we're seeing in the equity space globally. So what are you making of market movement?
Well, in terms of market movement, we saw this reporting season that 83% of companies in the US beat expectations. So investors are looking not rather at why companies are beating expectations. They just are happy with the fact that expectations, have been met and have been beat. And a lot of investors are looking at the fourth quarter. We're seeing manufacturing numbers coming through quite nicely, and they're saying, they're really counting on consumers coming through in the fourth quarter, and really looking at the top line earnings for the next couple of months. So probably we'll see a nice run towards the end of the year. A lot of expectations for commodities to still be strong towards the end of the year.
Let's take a look on the local front at the earnings reports that have trickled through here. I mean, we've got, of course, on the retail front, last week we had Foschini and Truworths painting gloomy outlooks, also poor retail results coming to the fore. Today, though, Mr. Price out with numbers reporting an increase of 13% in diluted headline earnings per share. What have you made of those numbers? Certainly the market seems to be impressed.
Yes, awesome results, very good for Mr. Price, and we've seen them benefit from the interest rate cuts, with consumers having more disposable income at hand. And we've seen also in terms of the credit card applications that consumers are just not buying on credit. Very nice dividend that was announced, and possibly we could see a high dividend yield next year from them. Very good results.
Given that we are approaching the Christmas season, I mean, what's your view for this performance over this period specifically, where all retailers so far have said that they expect a gloomy year ahead as we progress into 2010?
I think, Alishia, what retailers are seeing, that consumers haven't been consistent. So we had good July figures, bad August figures. We haven't really seen consumers coming through. Perhaps retailers are hoping that the Christmas spirit and it being a tough year for consumers, that there might be some spending towards the end of the year, and they're really counting on that. And obviously your sales probably coming through in January.
Let's turn our attention to Spar. I mean, diluted headline earnings per share flat on that side, and the company making specific mention of the fact that it's refrained from increasing prices as consumers remained under pressure. How long can the company afford to go down a route like this?
We're going to see in terms of your food retailers that they are increasingly going to come under pressure, especially with the effects of Eskom's interest, increasing coming through, and if Eskom does get their increases, over the next year, 2-3 years, they won't really be able to maintain those prices. So I'm not too sure for how much longer they would be able to do that.
Nevertheless, we saw an annual dividend increasing 26% to 200 cents per share. How has the market digested that news?
Market was pleasantly surprised. I think in terms of your Spar, in terms of your food retailers, they're the one company who's really going to benefit, and probably in terms of earnings earn more. And there's a lot of upside, probably about 5 Rand upside to its current price. So really a stock that investors could possibly look at.
PPC in the meantime, 40% drop in headline earnings per share. Not good. The blow has been softened though by building retail related to the 2010 soccer developments, and this coming at a time when PPC has confessed to being part of a cement cartel as well. So more specifically, what's your outlook for PPC?
I think what they've done was wise. They came forward. They really hopefully not going to get the penalty of 10% because they have come forward, looking for leniency, as well as being able to give all the details. So I think they might come off better than if they had put up a stance and said, without giving all those details. So possibly for them, I think in terms of the construction centre, going to be under pressure for the next 6 months in terms of awards being given to them after 2010, and that really would be important for the construction sector as a whole.